we're celebrating a massive milestone. 10 years ago, something truly revolutionary was born. Quietly at first, but really destined to redefine a huge chunk of our digital world. Welcome to Unwrapped, the podcast for DeFi, NFTs, on-chain culture, and all things in the BMX ecosystem.
And before we dive deep, just a quick reminder, this discussion is purely for educational purposes.
Yeah, we're here to help you understand the landscape, but this is definitely not financial advice. As always, please do your own research and make informed decisions. So today we're doing a deep dive into Ethereum's incredible 10-year journey. We'll trace its origins from, well, a pretty bold idea, walk through the big milestones, and explore how it evolved, from this novel concept into a real cornerstone of the crypto world.
And how it laid the foundation for vibrant ecosystems like BMX too.
Exactly. So where does this story start? It gets really interesting back in late 2013. A 19-year-old programmer, Vitalik, he envisioned a blockchain way more versatile than Bitcoin, proposing this idea of a world computer. What was so radical about that?
Well, the core concept, and what's fascinating here, is that Buterin, along with the other co-founders like Gavin Wood, Charles Hoskinson, Anthony DiOrio, Joseph Lubin, they were proposing a global platform running trustlessly.
Yeah, what we now call smart contracts.
Yeah.
Basically, self-executing agreements enforced right there on the blockchain. No middlemen needed. That meant a blockchain could do way more than just, move digital coins around.
Right. It could actually run programs.
Exactly. Programs and applications that run precisely as coded, guaranteed. It was a revolutionary idea at the time. It turned the blockchain from just a ledger into this dynamic, programmable thing.
Okay, so this ambitious idea starts taking shape. 2014, they raised, $18 million worth of Bitcoin in one of the very first big crypto crowdfunding sales. A huge deal back then.
And then boom, July 30, 2015, the Ethereum network officially launches. The Genesis block is mined.
And early adopters called it the frontier release. It was basically a sandbox, right, for developers to just jump in and start experimenting.
And the native crypto, ETH, launched at under $1, mostly just to pay for gas fees.
Yeah, primarily. Just to pay for the computations, the transaction fees. Who could have possibly guessed back then what it would become? It's wild.
Absolutely wild. Now, every big tech story has its trials by fire, right? Ethereum's first major crisis came pretty quickly, 2016. This super ambitious, leaderless venture capital fund built entirely on Ethereum. It raised something like $150 million worth of ETH. Biggest crowd fund ever at the time.
But then, June 2016, hackers found a vulnerability.
And siphoned off 3.6 million ETH. Ouch. That wasn't just a technical glitch, though, was it? It was more fundamental.
Oh, absolutely. It presented this profound philosophical crisis for the whole community, a real wrenching dilemma.
Right. Do you uphold the blockchain's immutability code as law, no matter what? Or do you step in to reverse a massive theft?
Exactly. And after some really intense debate, the majority chose a controversial hard fork in July 2016, basically rewinding the chain to restore the stolen funds.
But not everyone agreed.
No, a minority disagreed strongly, arguing that immutability was paramount. They continued the original unaltered chain as Ethereum Classic. And if we connect this to the bigger picture, this whole event really reshaped Ethereum's culture. It showed the network could be flexible, that community governance mattered. It proved its resilience,
Yeah, learning painful lessons about security, for sure.
Definitely. But also showing it wasn't just about software rules, it was about social consensus too. It came out forked but unbroken, as they said. And it set a precedent, really, for how the community would handle major crises going forward.
Okay, so if 2016 tested values, 2017 tested capacity, and maybe maturity.
The ICO boom.
Initial coin offerings. Suddenly, Ethereum was ground zero. Startups raising millions just by issuing their own tokens using Ethereum's ERC-20 standard.
And ETH's price just went parabolic. From under $10 in early 2017 to, nearly $1,400 by January 2018? Pure speculative fever.
Insane.
What's fascinating here, though, is that while the ICO era massively expanded awareness of what Ethereum could do, it really proved that product market fit for token issuance, it also brought huge excesses.
Like scams everywhere.
Yeah, tons of scams and intense regulatory scrutiny, especially from the SEC. Then the whole market crashed hard by mid-2018. Ether collapsed back down under $100.
So boom and bust.
Definitely. But beyond that, it really forced Ethereum to confront its scaling limits. It was a massive stress test.
And speaking of stress tests, CryptoKitties,
Yeah.
late 2017.
Oh, yeah. The digital cats that broke Ethereum.
Seriously, that quirky game just congested the entire network.
Yeah.
Transaction fees spiked like crazy.
$50 or more for just one simple transaction. It was a really clear sign that Ethereum desperately needed upgrades to handle anything close to global scale. A real foreshadowing.
So after the ICO bubble burst, 2019 was kind of quiet, right? The crypto winter.
Yeah, things cooled off. But underneath the surface, developers were building. Quietly building.
And then 2020 happened. DeFi summer.
Boom! Decentralized finance just exploded. The focus shifted to recreating financial services, lending, borrowing, trading, but without the banks.
You had protocols like Uniswap, Compound.
Exactly. Showing these complex financial activities could be automated with smart contracts, open to literally anyone. The total value locked. The TVL in Ethereum DeFi went from under $1 billion at the start of 2020 to over $11 billion by September.
Incredible growth.
And connecting this to the bigger picture again, DeFi really showcased Ethereum's composability. People started calling apps money Legos, right?
Yeah, because you could stack them.
Precisely. Deposit ETH, get stable coins, lend those stable coins out, earn interest, all seamlessly interacting. It just amplified innovation like crazy.
But success brings problems again.
Always seems to, doesn't it?
Hmm.
This success again stressed Ethereum's limits. Gas costs soared. It often became way too expensive for just casual users.
So Ethereum was rewriting the rules of finance, but still needed to figure out how to scale for everyone.
Exactly. The scaling challenge was still front and center.
Okay, so DeFi solidifies Ethereum's role in finance. Then 2021 hits, and something else takes over the conversation. NFTs.
Roaring into pop culture.
You had CryptoPunks, Bored Ape Yacht Club.
Yeah.
Suddenly, these unique digital assets were status symbols.
And then the Beeple sale at Christie's. $69 million for an NFT artwork. That just blew the doors open.
It really did.
What's fascinating here is how NFTs brought this entirely new audience to Ethereum. Artists, musicians, sports fans, gamers, people who maybe didn't care before.
Ethereum was suddenly center stage in pop culture.
Totally. But
Okay.
you know the pattern by now.
Yeah, another double-edged sword. All that NFT trading sent gas fees sky high again.
Painful heights. It really did feel like a whales-only playground for a while there. ETH hit a new all-time high near $4,891, which was great for holders, but everyday users.
Priced out.
Yeah, many were. It just hammered home again. Scaling solutions were urgently needed for broader accessibility.
Then came 2022, a brutal year for crypto overall, right?
Yeah.
Terra collapsing, FTX imploding.
A real crypto winter, yeah. ETH's price plummeted along with everything else.
But against that really bleak backdrop, Ethereum pushed forward with probably its most important upgrade ever, the merge.
The merge, September 15, 2022. Monumental. Ethereum fundamentally changed its core engine, its consensus mechanism.
Proof of work.
The energy-intensive mining process like Bitcoin uses,
It's a proof of stake.
where network security comes from people staking their ETH, locking it up as collateral. It was an extraordinarily complex feat, like swapping out its engine mid-flight while the plane is still running.
And it worked.
Flawlessly. The execution was a resounding success. The transition was seamless. They didn't miss a single block. It was incredible engineering.
And the impact was immediate, right?
Huge. First, energy usage just plunged by 99.95%. Overnight, Ethereum became vastly more environmentally sustainable.
That's massive.
And also, the way new ETH is issued changed. Post-merge, ETH actually became mildly deflationary sometimes, which boosted its narrative as ultrasound money.
Ultrasound money.
Then thinking bigger picture, pulling off the merge during that brutal bear market, it was just a massive testament to the Ethereum developer community, its governance process. It proved it could coordinate these huge, complex upgrades and really embrace change.
Okay, so the merge is done. Focus shifts again.
Back to scaling and user-friendliness, yeah. Largely through Layer 2 networks, L2s.
These secondary blockchains that handle transactions off the main chain.
Exactly. They increase throughput, lower fees significantly, but still inherit Ethereum's core security. Early L2s like Optimism and Arbitrum really started gaining serious traction.
And then there was the Shanghai upgrade in April 2023.
Right, also called Chapella. That allowed stakers to finally withdraw their staked ETH, a huge milestone for validating the whole proof-of-stake transition and building confidence.
And then came airdrop farming.
Yeah. That drove a ton of users to try out all these new L2 networks and dApps, hoping to get free tokens. By late 2023, L2s like Arbitrum, Optimism, and Base, that's Coinbase's roll-up, were handling a huge chunk of transactions.
Sometimes even more than Ethereum Layer 1 itself.
Yeah, sometimes even exceeding Layer 1 volume. The L2 thesis was really starting to play out.
But this boom in L2s created its own problems, didn't it?
It did. Complexity increased, liquidity got scattered across all these different networks, moving assets between them, bridging became kind of clunky and inefficient.
Fragmentation.
Exactly. So while ETH's price recovered nicely in 2023, showing confidence, this L2 fragmentation became a key user experience hurdle.
Which leads us into 2024. Ethereum really leaning into its roll-up-centric roadmap, right?
Yeah.
Doubling down on L2s as the scaling solution.
Precisely. And the big upgrade was Dencun, which introduced EIP 4844, Proto-Danksharding.
Proto-Danksharding. Okay, what does that do? People talked about blobs.
Yeah, blobs. Basically, EIP 4044 dramatically slashed the cost for Layer 2s to post their transaction data back to the main Ethereum chain. Blobs are like temporary, cheaper data storage specifically for these L2 rollups.
So it made L2s even cheaper to use.
Significantly cheaper, and L2 usage just exploded further. You saw new networks like Mantle, ZK-Sync Era, Scroll gaining ground. Total value locked across all these rollups surged past $50 billion.
But the fragmentation issue remained.
Oh yeah, still a challenge. Managing assets across, Arbitrum, Optimism, Base, ZK-Sync. It's not seamless yet.
And meanwhile, something else big was happening in 2024. Institutions.
Huge inroads. You had filings for Ethereum-based ETFs. BlackRock launched BIDL, a tokenized money market fund, on Ethereum.
So real-world securities represented as tokens on the blockchain.
Exactly. The lines between crypto and traditional finance started blurring significantly. Ethereum was visibly becoming infrastructure for parts of the traditional system.
Wow.
But this raises that important question again. How do you balance this modular, multi-chain L2 future with a smooth, unified user experience? Even the Ethereum Foundation started talking about maybe a strategic shift back to the base layer in 2025, ensuring Layer 1 itself keeps improving.
Right, making sure the foundation is solid for everything built on top.
Mm-hmm.
Which brings us pretty much to now mid-2025, a sense of regrouping around Layer 1.
Yeah, somewhat. The Pectra upgrade was implemented. That brought important improvements, especially EIP 3004 for account abstraction.
Account abstraction. You mentioned this helps make wallets more user-friendly. How?
Okay, so traditionally your crypto wallet is just tied to a private key, right? Lose the key, lose your funds. Very rigid. Account abstraction using things like EIP 3004 lets your wallet act more like a programmable smart contract.
Okay,
Yeah.
So what does that enable?
Things like multi-factor authentication, social recovery, so maybe trusted friends could help you recover a lost account, paying transaction fees on any token, not just ETH, stuff like that. The goal is really to abstract away the scary crypto complexity.
Making it usable for, like, your grandma.
That's the dream. Making dApps as intuitive as the web apps you use every day. And we saw market confidence return too. ETH rallied strongly back above $3,500 in 2025, driven by that continued institutional adoption. Public companies started putting Ether on their balance sheets.
A long way from a few hackers in Berlin.
You hear that sentiment a lot from longtime community members, just marveling at the journey from this tiny experimental project to global infrastructure. That ethos of decentralized coordination, it really shines through.
It's an incredible timeline.
Yeah.
But stepping back from the chronology, what are the really big ideas, the core innovations born from Ethereum that have fundamentally changed things?
That's a great way to look at it. Beyond the dates, what's the lasting impact? And it's a long list, but a few really stand out. First, obviously, smart contracts. Self-executing code, that's the foundation. This idea of trustless business logic just removed intermediaries everywhere. It enabled DeFi, games, enterprise solutions. It's still reshaping how we think about digital trust.
Absolutely foundational.
Then decentralized finance, DeFi, open financial systems. Ethereum-proved finance doesn't need banks in the middle. Anyone online can access lending, trading, stablecoins permissionlessly. Billions flow through these systems daily now. It's a parallel financial world.
Then tokenization and ICOs maybe evolved now.
Yeah, exactly. Ethereum made creating new tokens super easy thanks to the ERC-20 standard. That standard is key. It ensures tokens can easily interact with everything else on Ethereum. While the early ICOs were messy, the core idea of tokenized fundraising, fractional ownership, that's matured and is being applied to everything from startups to real-world assets.
And culturally, maybe NFTs?
For sure. Non-fungible tokens. Digital ownership and culture. NFTs proved you could have true, verifiable digital ownership for art, music, collectibles, game items. It empowered creators, built huge communities, and created this whole new digital collectibles economy. Massive cultural impact. Decentralized autonomous organizations, community governance. Ethereum popularized these online organizations run by code and votes, not CEOs. Thousands exist now, managing millions or billions in treasuries transparently on-chain. It's changing how groups organize and make decisions together.
And technically the scaling solutions.
Yeah, scalability via layer 2 and sharding, modular blockchains. Ethereum really pioneered this layered approach. Layer 1 for security, layer 2s for execution speed and low fees. Roll-ups and eventually full Danksharding aim for potentially millions of transactions per second.
And maybe one more less technical.
I'd say Ethereum's culture of upgradability and resilience, this is almost social technology. 10 years of hard forks, huge upgrades, like the merge. It shows a willingness to adapt, to evolve, and combined with its incredible uptime, basically zero pauses, zero maintenance windows, that reliability plus adaptability. That's cemented Ethereum as dependable global infrastructure.
It's an amazing list of achievements in just 10 years. But knowing this community, they're not stopping. What's next? What's on the roadmap as Ethereum enters its second decade?
Oh, definitely not resting. The roadmap is packed. A huge focus remains on scaling to billions via Danksharding and data innovations. Full Danksharding is the ultimate goal there, aiming to process potentially millions of transactions per second, really making Ethereum a global public utility that billions can use without crazy fees.
Making it truly accessible.
Exactly. And related to that is making Ethereum easier, account abstraction and user experience. Continuing the work we talked about with Pectra, making wallets super flexible, enabling social recovery, paying fees easily, making it truly user-friendly for everyone. Grandma-proof, essentially.
Grandma-proof crypto. I like it.
Then there are emerging trends like restaking in Ethereum as a trust network. Things like Eigenlayer, letting ETH stakers reuse their staked ETH to secure other networks or services. This could turn Ethereum into the central hub for securing the whole crypto ecosystem, a trust engine for the global economy.
Wow. Expanding its role even further.
Potentially, yeah. And finally, always, continued decentralization and governance evolution, making sure it stays decentralized, that anyone can run a node, and continuing that culture of open debate and careful upgrades as the stakes get higher.
This whole roadmap just highlights how projects built on Ethereum, like BMX, are constantly leveraging these advancements, right? From smart contracts, token standards, now L2 scaling. BMX is really a living example of how Ethereum lets you turn these bold ideas into working realities.
Absolutely. The innovation on layer 1 enables the innovation we see in ecosystems like BMX.
What a journey it's been, from this almost academic idea of a world computer to a global settlement layer that's changing finance, culture, everything.
It's catalyzed whole new industries, DeFi, NFTs, new ways to organize DAOs, new ways for communities to just coordinate globally.
And if we connect it all, the story is just one of incredible resilience and community drive, isn't it?
Totally. It's navigated hacks, regulatory battles, scaling bottlenecks, and it always seems to emerge stronger, more mature. It's definitely still here, still strong, and still building.
So as Ethereum steps into decade 2, it feels less like just tech and more like critical infrastructure. The question isn't just what it is anymore, but what can you do with it? What will you build?
That's the question.